Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, August 27th. Well, firstly, looking at the relative performance of the various indices today, and the Russell 2000 certainly was the laggard, down 0.21%. The Dow Jones 30 was up 0.09%, leading the market. The S&P was pretty much unchanged, and the Nasdaq 100 was up 0.04%. But the real loser here was the Russell 2000, but still only down 0.21%. Now firstly to the S&P 500, and here we see a change of trend today. This candle has made a lower high and a lower low. Take that line off, and here we see a doji type candle, but a candle where the buyers have closed with control, so suggesting that the sellers have lost commitment throughout the trading day and the buyers have come back and traded the market back up towards to closed between the high and the midpoint level. It suggests that there is a possibility of a change of trend back to the upside, and what we wanted to see on a change of trend here was the sellers strong in the market, and we haven't seen that, so suggesting that the next move here could be the buyers coming back into the market and changing the trend and potentially testing the major high at 2005. But with the market still closing around the 2000 level, we're still seeing the influence of the resistance at that round number, but eventually resistance at round numbers is able to be beaten, and there is a very good opportunity here for the buyers. Now if the market does come off, potentially strong support down at the window that was open, it's still just slightly open, and then down to the Tenkan-sen. But we have a bullish market in all three time frames here, supported by the Chica span, so it's likely that if we don't continue trading down, then the buyers are likely to come into the market in line with the trend in the other three time frames being up. Now just one thing to watch for and be a bit cautious about is the Kijun-sen pointing flat. Often when that's flat, price action tends to be attracted back towards the equilibrium suggested by the Kijun-sen. So we will be looking for a potential continuation of the trend to the downside, so watching the low very carefully for a lower high and a lower low. Now yesterday we were looking at the Fibonacci extension technique, and here we saw the rejection of the market for the past two trading days from above the 23.6% level. We were looking for a change of trend. The sellers took control of that candle for yesterday's trading. We have had a change of trend today completed with the market making a lower high and a lower low. Now the current Fibonacci projection is not terribly useful, but importantly we've seen the current candle test down through the 50%, the 61.8% level, and test almost to the 100% level, being strongly rejected from there, and suggesting that with the buyers taking control, that there is a real possibility of the trend changing back to the upside. And also yesterday with the Fibonacci retracement in an expansive mode of that, and for the second trading day yesterday being rejected from the 161.8% level, set the market up for this change of trend that occurred today. And with the Fibonacci retracement tool here, we're seeing the price action rejected from below the 31.8% level, with buyers taking control, suggesting a very real possibility of a change of trend to the upside. Just looking at our bands here, and as we see the bands continuing to widen, it suggests that there is great volatility in the market, and it certainly wouldn't surprise to see the market come off and be attracted back towards equilibrium as suggested by the area within the bands, and certainly the middle level, which is the 20 period moving average. If the market does continue to trade down in line with this new first time frame downtrend, we should be looking to the top band to potentially offer itself as support at 1986. But at the moment, with the market still trading up above the upper band, we do have still a strong uptrending market.